All right, ladies and gentlemen, hello. This is me, Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com, and today is Wednesday, ladies and gentlemen. Today is Wednesday, one day before the ECB interest rate decision, and that's what I wanted to talk to you about today. Look, before we jump any further, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. So yes, today basically, if you don't know, we are getting the BOC interest rate decision. But about all that, you can check out our YouTube channel on YouTube. But basically, yes, I already mentioned that and I already talked about it. So you can check out. There was a piece that I did on Bank of Canada. So that was done yesterday, so you can check it out if you want today. Still can, but yeah, I hope you can find it useful. Look, basically, oh, this is what I was referring to. This is the thing here. This is the video about the Bank of Canada. So, in terms of going further, quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Now, straight away, I want to jump into the economic calendar and Thursday. Thursday, we're getting the interest rate decision. There we go. We are getting that cut again. It seems like that's what's going to happen, but the only thing is that the market is trying to understand now, is this going to be the last one, or actually are we going to end up dropping below the 2% threshold? Now, it's very interesting, of course. So let me just launch the chart here. That we can see. It's very interesting. Yes, at this point we have dropped quite significantly. We kind of, if we would do technical analysis on this chart, you can see that we kind of retraced like almost 50% here, but not quite yet. Let me just double check this. If this makes sense. Normally you should not be doing this, but fair enough, we're doing it. So yeah, look. We are still dropping, and the bank is expected to go and cut the rates. Now, of course, everybody's a little bit debating this idea because there are fears that inflation might pick up. Certainly, inflation so far has been coming out. The headline year-on-year inflation came out on the lower side. Recently, it came out at a 1.9, and let me just show you what I'm talking about here. So on Tuesday, we got the inflation figure here, as you can see, inflation year. The estimate was at 1.9. So this is the forecast. The actual figure right now stands at 2.2 still, but the forecast is for a lower number. So the core number is expected, it has declined as well. Again, this is the flash, this is the estimate. But yes, at the moment, we're seeing kind of a tendency towards the downside. Unemployment rate is on the lower side as well. So in a way, everything is kind of pointing more towards another cut. And the market is kind of, the ECB is kind of comfortable with that in a way. They have the justification. However, this could really turn very quickly sour, and it could really turn, if the global inflation starts picking up, then, well, it could, like I said, it could have its effect, a negative effect on EU as well. And we could go into this kind of thing that everybody's talking right now about, the stagflation, when you'll have high inflation, high unemployment, but then zero growth. And look, what can I say? For now, the problem is that the ECB continues to cut. In a way, that's good for this index here. This index has been rallying. Look at DAX. This is unbelievable. This is like just crazy moves to the upside here in terms of like how much we have done this year so far. Let me just grab the measuring thing the measuring tool. So from January 2nd, when we opened up the year, we have now done roughly around 22%. And I talked about this in my morning webinars, so you can feel free to join those. I mean, those you can see here in the live session. Those are recorded as well, but hey, you can also join them live. They're delivered from Monday, Wednesday, and Friday. So yes, check it out. You can always see it here. But what I said before, that look, the 22%, that's like easy peasy. Now it's like we reached that. Now the question is, can we go higher? And in general, I think that what's on people's mind right now, and especially on DAX traders' mind, can we reach that 25,000 zone, the nice beautiful quarter of 100,000? And in a way, I'm not going to rush into things. In general, I'm still pointing towards the upside. I don't see any issues there, because again, the U.S. stock market is still pushing higher. The U.S. stock market wants to go for those all-time highs. So anyway, it could, if that one's going to go, there, then it could drag other indices with them, and in this case, the European DAX. So certainly there are concerns about the tariff wars with the EU. And I think that this is what the Central Bank of Europe is trying to do. They're trying to boost lending. They're trying to boost economic development in order somehow to mitigate all the tariff wars that are happening right now. And although everything has calmed down a little bit, we're seeing, yes, and that's why DAX is kind of rallying. But once we have these headlines again, where when the U.S. administration will start attacking European Union again, that's when the index could reverse back down again, because we saw this happening here. This is like at the end of May, when Trump came out with tariffs here. He said that he's going to put tariffs on EU, and there we go. It went just all down the drain here, very quickly sold off, and then we quickly recovered, because on Monday everything was put aside. So that's where, that's how we currently trade. That's how we currently look at markets. We not only look at the economic data, but we also look at tweets and headlines in the news. Well, actually, headlines in the news were always the case, but yeah, nowadays it's like more of a message posts and tweets and all that stuff. Anyway, for now, I'm looking at this, and like I said, I'm still leaning towards the upside. Like I said, the forecast is for a cut, and then the question will be very carefully monitoring and the press conference, which will be 30 minutes after. Let me just double check. Yeah, 30 minutes after the interest rate decision. So that's when the interesting bit could come in, because if they're going to somehow hint that for now they're going to pause the whole kind of easing, then basically we could see maybe a little bit of a retracement back down here on the DAX. However, jumping into EURUSD, at the moment this has been on a strong side, because again, mainly of the weaker US dollar. But like I said, if we do get a pause on the interest rates, then we could see on further interest rates, not in this one, but in further interest rates, then we could see Euro USD kind of traveling further north here. We could see a nice test of the 1.1573 territory, which is the current highest point of this year, and maybe even we could go up here, up above the 1.16 zone. Again, that's just an idea for now. Let's not forget that it's not only the ECB that will impact this pair, it's also all the job numbers which are getting from the US this week. So yesterday we had JOLTS, good performance there. We have today the ADPs, and on Friday we'll get the NFPs. So keep your eyes on that. Don't try to kind of measure them together or gauge them. No, just try to look at those separately. For now, like I said, the Euro USD here situation, I'm still pointing towards the upside despite the cut. Why? Because just purely of the weaker US dollar. It's just that the speed, the pace at which this could travel higher, I think that's what's important. So if, like I said, if the rate comes down and they say that they're still willing to go for some cuts, then I could still see EURUSD pushing higher, maybe just a brief decline, but then still recover and push higher just because, like I said, the US dollar is not feeling the love right now. However, if the ECB does come out with the statement saying that, that's it, after this one, they want to take a wait and see approach and blah, 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 that's when, like I said, that's when maybe the euro could strengthen a little bit more. Again, it's an idea. Please feel free to debate this in the comments. Let me know what you think. Yeah, hopefully you enjoyed this little video. I just wanted to share with you, just update you what's happening tomorrow. So hey, ladies and gentlemen, thank you very much. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you next time. Bye-bye.